Hi, I'm Jeremy Hallett. Welcome to Insurance Insider. Today, we're going to talk about why business owners should create a buy-sell agreement. We're not going to go through examples on this one. In another video, we'll talk about one-way buy-sells, cross-purchase buy-sells, entity purchase buy-sells, and how to fund those with life insurance. But right now, let's talk about why a business owner or business owners should put a buy-sell agreement in place. So, when a business owner dies, a myriad of potential problems can occur. So let's first talk about the surviving owners, okay? Surviving owners, they need to retain control of the business without interference from the deceased owner's heirs. They don't want a spouse or children or someone else coming in and telling them how to run the business. They know what they're doing. They want to keep being able to do it. They want to enact a prompt transfer of the deceased owner's interest at a fair price. So they want those shares at a fair price promptly. And they also want to preserve the loyalty and support of all the employees, all of the customers and creditors during and after the transition in ownership. So that's what the surviving owners would like. The deceased owner's heirs, what they want is ongoing financial security after the loss of their loved one, after the loss of a deceased owner's salary and those benefits. It's been supporting them. They want that ongoing security that was there before that untimely death. They also want retention of the business interest, or they want a timely sale at an attractive price. And then they also want a prompt settlement of the deceased owner's estate, right? Including a proper valuation of the business interest in cases where they actually plan to sell. That's what the deceased owner's heirs want. The reality is lots of businesses don't have buy-sell agreements in place, and conflicts commonly arise, and they lead to litigation between the deceased owner's heirs and the surviving owners. There's delays without a buy-sell agreement in place. There's delays in the transition to new ownership. There's delays in settling the deceased owner's estate. All of this becomes inevitable. And then also there's loss of customers and employees and creditor confidence. And this all can damage the business, and it can even force liquidation of a business that deceased owner spent years building. And there is a solution to this. The solution is a formal written buy-sell agreement. So this is an agreement between the business owners, and is typically funded with life insurance, but we'll get to that later. Okay, so this agreement is the business owners get together, we sit around a table, we have a conversation with one another, and we make a determination of what's an attractive price for all of us. What do we agree to? What do we want to have happen if one of us were to die? Okay? And what that agreement will do is it'll ensure an orderly and successful transition following one of the owner's death. So what that buy-sell agreement does, it establishes this fair price for the business interest and the terms, not only the price, but the terms of the sale that are acceptable to everyone. It also establishes a value for all estate tax purposes, which helps avoid estate settlement delays and IRS challenges. And it establishes the basis for determining the amount and funding of life insurance needed to fund the purchase of the business by the heirs or others. Before I move on that one here, if you have a buy-sell agreement, and we say that one of the business owners will buy the business for $1 million from their partner, and their partner dies, but they don't have $1 million to pay their partner's heirs, that agreement doesn't do any good. This is why life insurance needs to be included in this, so that that surviving owner has the ability to pay the heirs of their partner or partners, okay? Also, what the buy-sell does, it'll encourage then confidence in the ongoing vitality of the business in the eyes of the customers, the creditors, and most importantly, the employees. So the bottom line of all of this is this properly designed buy-sell agreement will satisfy the concerns of all the parties involved by ensuring that business will continue, and that business continuing will actually benefit everyone, from the heirs of the deceased business owner to the new owners, to the employees, to the customers, to the suppliers. And fully funding that agreement with life insurance is really the most effective way to ensure the viability of the sale when the time comes. So thank you for listening. Appreciate it. We've got some more videos coming, one on a one-way buy-sell, cross-purchase buy-sell, entity purchase buy-sell. We'll go through different solutions for how those buy-sells can actually be funded with life insurance. And as always, if you have some comments, questions, please leave them below. Smash that like button for me if you would, and Really appreciate you. Thank you for listening. Talk to you the next time.